Hi guys, I'm Lance Miguel Lansang Angeles, and now I am going to teach you how to create an income statement. Well, what is an income statement? An income statement is a financial statement that shows you the company's income and expenditures. It also shows whether a company is making profit or loss for a given period of time. It includes sales, cost, and profit. And we should note about the cost because cost talks about the cost of the products that is being sold or how much were the product were purchased. And how to prepare it? Well, first we need to start with the title, have two columns, list down the sales or the total revenue, and deduct the cost of sales, and we can get the gross profit. And from the gross profit, we should deduct the expenses, and that will be the net profit. The first step would be write down the title, which is income statement for the year ended December 31, 2020, whatever year it is. It is always the same title, guys. Then next step is to, of course, create two columns. The left column represents the total of individual accounts, and the right column represents the total of the categorical accounts, which are sales, profit, cost of sales, the net profit, as well as the expenses. Then write down the total sales or the gross sales, which is 144,810 to the right column. Then the cost of sales. Cost of sales includes the opening stock, which is 16,010. It will be written down at the left side of the column. The next is the purchases, 96,318, and we will deduct the closing stock, which is 13,735, and we will get the total cost of sales of 98,593. Then to get the gross profit, we will deduct the sales to the cost of sales. 144,810 minus 98,593 is 46,217. Then we will write down next the expenses. Expenses includes, of course, salaries, which is 18,465. The next is electricity, which is 1,820. Then rent, 5,647. Then sundry expenses, 845. Vehicle expenses, 1,684. And of course, we will get the total, which is 28,471. Then we will deduct the gross profit to the expenses, which is 46,217 minus 28,471, and we can get the net profit of 17,756. To give you a brief summary about the process that we did a while ago, the first thing that we did is, of course, to extract the total amount of sale from the trial balance. The total amount of sales is the total revenue or the total goods sold by the company. After getting that amount, we will deduct it to the cost of sales. The cost of sales is the total expenditure of the company on the raw materials or the production of the merchandises. Then the difference between the two is the gross profit. After getting the difference, we will of course take the expenses, which is what we exactly did. When we take the expenses from the trial balance, we deducted it to the gross profit. So after deducting it to the gross profit, we got the net profit. So if the net profit is positive, then it is a gain or it is a profit. However, if it is negative, it is a loss. It is a net loss. And that's it for the process of creating or preparing an income statement. I hope you learned something from Lance. Thank you so much.